All righty, folks. It is Q1 earnings season, and as normal, we kick it off with the big banks. We got to have this conversation with the man, myth, the legend, Taylor from Life Goal Investments. How you doing, buddy?
You're too kind. I'm excited to be here. This is a big week, to your point. Let's get right
Uh,
into it. Friday's the day.
yeah. So Friday, the big banks. I think it's J.P. Morgan and Citi come out, and then the Monday will be Morgan and B of A and Wells Fargo, kind of that kind of strategy. But I got to
Yep.
tell you, what I'm looking for from the big banks is I want to know about how much lending they've done, origination, or however they report that. Has it meaningfully fallen off? I want to talk about credit tightness. Have they changed their lending? I want to talk about reserves for bad debt. Are they still adding to that pile? What are they doing with the dividend, if anything? I think there's a lot of things going. Like, how much cash did they get? Right? We've seen this big sucking sound, but for the last 2 weeks, it's gone to money markets. Where's all the money going? There's just so much stuff, and JP Morgan is one of the few stocks I own, so I'll be paying attention to that one.
This is one of the biggest banking reports we've gotten in years. Like in years, and I mean that in a real way. We obviously have this shakeout that has happened in the regional banking sector. How have big banks adjusted for this is the big outstanding question mark that I think will start to get answered, and we'll get a narrative behind that coming up here on Friday. And so for context, so people know, to start, big banks have different regulatory rules than the regional banks do, because they are so systematically important to our country as a whole. So the reason you've started to see the chinks in the armor quicker on the regional banking side is because they were able to do things from an investment standpoint, buying bonds, to a more meaningful degree than the big banks on the other side were able to do. But that's not to say they don't face some of the same issues that the regional banks do, and some of that will be portrayed here on Friday in their earnings reports.
Yeah, I mean, what is the one thing, like, if you're going to pick one thing you're looking to hear from the four, what would it be? Would it be the reserves? Would it be how much capital that came in or left? Or what's one of the things you're looking at seeing, wow, what happened?
I think what you want to see here is what happened from a cash flow perspective, and not their earnings cash flow type thing. How much
Deposits.
money was moved into or out of these banks? I think that will give you an idea of consumer sentiment as a whole. We know it's bittered and become very negative on the regional banking perspective, but I want to see what happened on the big bank perspective, and we'll get a look at that on Friday.
Yeah, and the other thing they have is it called net interest margin, where
Yep,
they basically are paying depositors nothing, and then they're going to the Fed and getting 5% as a round number.
correct.
Uh, we talked about that a couple quarters ago. It's like record numbers for doing nothing. You don't need employees to do that, right? Don't pay anything
Correct.
over here. Go to the
Correct.
Fed, make 5%.
That's exactly right. And so the other thing about that is net interest margin on lending as well. So when you take out a mortgage, right, you essentially have that money sitting there. So let me take a step back because I didn't state that well. So when you take out a mortgage, they're lending to you, getting a 6% return, something like that.
Yep.
And again, that is that net interest margin spread between the two. So they're getting that 6%. But what happens when mortgage rates come down, which they have, is all of a sudden that net interest margin starts to thin. And simultaneously, the bond market rates are dropping as well. So they're going to the Fed and getting a lower rate from the Fed as well. So you're seeing a squeeze on net interest margin across the board. And it's not just banks that experience this. Think about online brokerage platforms, places like that, where you sit your cash there. When it sits in cash, that has a net interest margin effect as well, because a lot of them have banking arms and they do the same thing.
Yeah. Well, it's net interest margin for the big bank will be interesting to me. You may know this. I don't know it. But right now, they make a lot more money just overnight with the Fed. Why
Correct.
why lend why do a mortgage at 5% when you get 5% from the Fed? Right?
Correct. You're 100% correct. But it'll be interesting, again, as rates continue to fall, that dynamic will change. So that may say, okay, now they need to start lending again. But on the other side, we just had this huge liquidity suck in the regional banking system.
Yeah.
And are the lending, standards going to change? I think probably because they
They
need
have
more
to.
liquidity on their balance sheet, because otherwise banks become insolvent. We just saw this.
Yeah, I don't know if you saw it. I read it yesterday. We got a report that in the last 2 weeks of March, regional bank lending was down 105 billion.
Wow. Yeah.
Yeah,
So,
just
and I
just in
think
two
the number
weeks.
is 50 or 60% of small business loans are originated at local regional banks. So if we have this massive bleed out, again, 99.9% of businesses in the United States are qualified as small businesses. They're getting 50 to 60% of their loans from regional banks. They're employing 50% of the nation's workers. Guys, like, this is a really bad negative feedback loop. If they can't get lending, they can't grow their business, they can't hire, they have to lay off. And then the consumer at the end of the day is not getting paid and going out and buying iPhones and whatever else.
Yeah. Again, this is a feedback loop, and this is why I've tried to highlight on my channel that we won't really see the impact of this lack of lending or tighter lending standards until Q4. Right. They're going to bleed through their cash on hand. They're going to reduce expenses, capital. We've already seen capital improvements down, but you're really going to see the impact of this in Q4, likely Q1, Q2. What do you think?
So the other piece of this, totally agree. The other piece of this that you had already mentioned that's important to see, because it tells us what the bank's perspective of the health of the economy is, loan loss reserves. Yeah. Essentially, how much money are they saying we're going to set aside this money because we think there's going to be some breakage in the loans that we have already issued because companies aren't going to be able to pay their debt obligations. So that'll be really interesting to watch as well. That's another thing that's, and you've talked a lot about that, to your credits. But that is the biggest, brightest minds potentially in the economy as a whole, saying, here's what we think is happening going forward. Here's what we can see through our tea leaves. And here's what we're going to do about it.
Yeah. The other thing that this is actually one of the things I expect, and this is from JP Morgan, a stock I own a few shares in, right? I actually expect them to come out with a rather large reserve for bad debt. And if you gave them true serum, I think what they would do is we're managing the number. I think they had an above average Q1 because of net interest margin. They don't want to show a good number because that will make them the evil bank and target of Congress and all this other freaking nonsense. So they're going to make some big old scary story, double or triple what they would have normally done to manage earnings. And that would just be a kitty they bleed off later. That's what I think is coming.
It's funny. You have such an interesting perspective because you've made some of these decisions on balance sheets. And it's like, your stories are so cool to say, like, the whole kitchen sink quarter. Like, we know things are getting ugly. We're going to manage it, and then we're just going to blow the bottom out of it in one single quarter. And admittedly, I've never been in those meetings to see that happen, where you're accounting, manipulating numbers, and it might all be factual.
Yeah,
but
it's legal. This is not fake. This is legal.
Right.
You do have some color, right? That's what I think is going to happen. I think JP Morgan's number and other big banks would have normally been pretty good. But they're going to use their discretion to increase their reserve for bad debt, which will make the quarter look weaker than it normally would. That's what I expect. And again, it's all the banks, all the big ones. Because again, I think what happens is they're still paying their depositor to zero. They got a whole bunch of new money. They put it at the Fed window for 5%. They're making a gazillion percent on that. And they're like, God damn, we made a lot of money. We better not show that.
This is not going to look good.
It's not good.
Perspective.
I don't want AOC or Bernie Sanders or Elizabeth Warren calling me.
Oh, they're going to crush him. They're going to crush him if they do.
Oh, it'll be funny. Well, let's talk about one other thing that comes on Friday. I actually think retail sales will be interesting.
Yeah. So it was weird. So, like, we've had a little bit of a weird spell that played out here over the last few months. So December usually sees a massive pickup because of holiday spending. December was down.
Weak.
It was really weak. And then January came out, massive pop. And so maybe some of that is just wishy-washy, a little weirdness there. February, boy, I'm slipping on my memory on February. Do you remember what the February retail number was like?
February number was positive, but down below expectations.
Okay, gotcha. So yeah, I think that trend continues. I think the retail consumer is seeing the writing on the wall. You've stated this very many times, that the banking crisis has caused the consumer to start have these massive question marks, and maybe we need to tighten our belt, and probably tightening too late. Don't get me wrong there, but nonetheless, I think that retail spending is going to come in really light here. And again, retail, the consumer, creates 70% of our GDP. That is the backs that we live on.
I'm going to pull up my calendar. Silicon Valley Bank, was that March 9th and 10th, the second week.
Correct. Yep.
So
So that's a whole, that's a whole
it's a month ago. Yeah.
Yeah.
So when I think about retail sales, I think most of March, I think the consumer stopped. I think it's going to be a massively negative number.
Yeah. So that'll be 2.5 of the 4 weeks of March. We'll call it.
Yeah. Yeah.
Yeah. So 2.5 out of 4, that's whatever, 60% of the month.
And I think those first 2 weeks were like zero, like I'm frozen, right?
Yeah. It was scary. It was scary. People weren't getting their paychecks. My sister's company, who I'm on vacation with this week, her company ran their payroll through SVB and she got a delayed paycheck. Do you think she increased or decreased her spending when she didn't get a paycheck?
Yeah. I'm gonna guess she didn't do a lot of a lot of spending. So yeah, this is gonna be a wild week. We get CPI on Wednesday, which we talked about, retail sales, bank earnings. Again, I think we're in it. I think the next 4 to 6 quarters are going to be rough, but there will be plenty of opportunities to buy stuff. We're going to come back every week. You do a lot of stuff on Instagram and TikTok. What are the channels?
Yep. Channels are at Life Goal Investments, plural. So we put out 1, 2, sometimes 3 videos a day. And the more nasty the market is, the more videos we'll put out because we know you guys need the explanation of what the heck is going on. Hopefully we can provide a little context there, whereas some people don't do as good of a job at it.
And sometimes you'll get Taylor on a good day and he just rants. He just lets people have it. So I stay tuned for those ones because they're a lot of fun. Taylor, keep doing what you do, man. Take care.
You're the man, Michael. Thank you.